In today's video, where have prices fallen the most? And as a result, where are, in my opinion, some of the better buy low opportunities that are present now and will continue to be present? Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty, back with another video for you guys here today. Before we get into the points of today's video, as always, you can find my contact information in the description box with regards to my Gmail, my office information, my Instagram as well. Feel free to go follow me on Instagram and get in touch with me with my contact info if you have any further questions about topics covered in today's video or any general inquiries. And if you do want to get in touch with me, you want to do a little bit of homework and your own due diligence, feel free to just Google my name on Google and find my Google reviews and go through them before you get in touch with me. Before we get into the point of today's video, there's a poll up on my channel right now, which I would appreciate your feedback on, or even in the comment section. I get asked a lot, to talk more about what type of properties I've sold or bought. And I'm asking you guys, would you be interested in a video where I go through properties that I've sold or bought so far in 2022 and give you some background on the transactions? I'm sometimes a little too hesitant to do so because I don't want this to become a self-promotional channel. That's what my Instagram is for, where I promote my transactions. But this channel, I want it to remain as informational. But if you are interested in that type of video, feel free to let me know, or if you're not. But anyways, let's get to the point of today's video, which is about where prices are right now and where prices have dipped the most, right? Now we're gonna look at December 2021 to January 2022. And we're gonna go through average prices, not median prices. The reason off the top being is because median is better reserved for a data set where there is a lot of variance. And when you're looking at detached properties by municipalities such as York Region or Toronto, of course, there's gonna be a fair amount of variance in terms of you're gonna have a $5 million detached property and a $2 million detached property. The variance there is $3 million. But you're gonna have enough sample size, meaning you're gonna have enough sales, enough points of entry in the data set where that variance is not gonna throw off the average one way or another, right? Because we're looking at December in full versus January in full, February, March, so on and so forth. Where prices have fallen the most for detached freehold are in the following two regions: Peel and Durham. Let's go through the prices quickly. Starting with Peel, the average sold price for a detached freehold property in Peel in December was 1.6. The prices here saw a 10% jump from December into January of 2022, where prices in Peel were around 1.778. So $170,000 more, $1,778,000. And keep in mind, that's an increase from 1.6. So that's about a 11% increase in average sold prices for detached properties in Peel over 1 month. Well, into February, which is where I started talking about this stuff, to pat myself on the back. Prices started to relax in most areas, but in areas where prices shot up a lot. So in February, the average sold price of a detached freehold property in Peel went from the aforementioned $1,778,000 price point to $1,752,000, a drop of $20,000 to $25,000. Nothing significant, just a 1.5% drop. But into March, what we started to see, and what I once again start to talk about, was inventory increasing, terminated listings increasing, price changes increasing, obviously interest rates increasing, buyer fatigue increasing, and all this were ingredients to make the perfect stew for what came in Peel and what will continue to occur, which is from February to March, a drop of 10% in prices. So prices essentially went up 11% December to January, down 1% from January to February, now down another 10%, where the average sold price went from 1.75 in February to 1.575, so $1,575,000. Once again, a 10% drop from February to March. So this 10% correction puts prices only $25,000 below where they were in December. And you know, at the end of the day, it's not as if anyone can now start buying detached freehold properties in Peel. By no means is this now a buyer's market, although it's definitely far closer than you would believe. That's not the point. The point here is that if you are an investor and you are looking to purchase a freehold property for investment purposes, Peel would be one of the areas I would start looking at, because it has already seen a 10% drop in prices. I think with further interest rate increases that are going to come in a couple of days as of recording of this video, because this is being recorded April 8th, and not to mention the increase of the foreign buyers tax from 15 to 20%, a further increase of inventory, I think there will be more room for the prices to drop. Now, I can't predict how much. If I can predict how much prices would drop or how much prices would go up, I would be retired right now. I can't. But I can definitely with full confidence say that Peel represents a great buy low opportunity now and will continue to represent a good buy low opportunity throughout the summer. Another area that has followed a similar trend, but not to the same extremity as Peel, is Durham. Doing the same thing. Let's look at Durham sold prices in December. The average sold price of Durham was 1.178. Once again, not for all freehold properties, for detached freehold properties. And prices from there on, from December to January, saw a 12% increase, where it went from $1,178,000 to $1,352,000. This was even a larger increase than what happened in Peel from December to January. Of course, the price point is lower, but in terms of percentage, even a higher percentage increase. And unlike Peel, Durham's growth continued from January into February in terms of average sold price, which was an increase of a far more tempered amount, but nonetheless 4% in average sold price, where property prices in terms of detached freehold prices went from the aforementioned $1,325,000 to $1,379,000 in February. But once again, what did we see as I went through on this channel? We saw failed bidding wars. We saw a spike in inventory that was unexpected for a lot of people in conjunction with buyer fatigue, in conjunction with the interest rate hikes. And once again, the same thing has happened in Durham from February to March. Prices dropped from $1.379, $1,379,000 into March down to $1,254,000. That is a drop of about 9%. So this is not good news for sellers, but guess what? What's bad news for sellers typically is good news for buyers. And what's bad news for buyers is unfortunately typically good news for sellers. It's a zero-sum game at the end of the day. The point here is, much like Peel, I believe Durham represents a good buy low opportunity due to the sheer fact of how much prices went up initially, unhealthy amounts, and how much prices are going to come down in the next few months. Once again, I can't predict how much down to the dollar amount or the percentage amount, yet nonetheless, I believe there is more room for prices to calm down in Durham. Much like Peel, will it be upwards of another 100K drop in prices? I don't think so. However, I do think it's a really good buy low opportunity in Peel and Durham right now, and will continue to be through the summer once again. Now, in comparison to these areas, it's not as if Toronto went up or York Region went up. both Toronto and York region saw a dip in prices. The average sold price of a detached property dropped 5% in York region from February to March. And similarly for Toronto, the average price of a detached property dropped around 7% from February to March. But I believe these areas will hold prices much better. I do think Toronto prices will diminish more, and I do believe York region prices will diminish more as well. I don't think they'll be immune to what's going to happen in April and early summer. Prices there have ways to come down as well. I just think, all things considered, the markets in Toronto and York region were, even in the hottest periods, more tempered than, Peel and Durham. Now, let me tell you the two risks associated for waiting for prices to fall a bit further, which I've been telling my investors to do so, just to be clear, right? End users is a different story. I've been telling my end users, hey, there's no rush to buy, but if you really find something you love right now, go for it, because you rather have something you really love right now as opposed to not having something you really love at $20,000 less in a month, right? That's a very fair analysis, I think, on my part. But in terms of investors, I've told them to hold off. There is no rush, right? However, the two risks associated with that are the following. First and foremost, what we saw with the condominium market bottom in 2020. What happened was the condominium market shifted in towards a complete buyer's market where prices kind of plummeted. It was a very good time to buy. Sellers were having a hard time getting offers on the property. There were no bidding wars occurring. It was just a buyer's market, a really good time to buy, and prices were far, far lower than what came in early 2021. Well, what happened was that bottom didn't last long because a lot of investors, a lot of people I worked with were opportunistic and rushed in and started buying when the price was low, and they kind of created a floor, and that kind of ironically pushed prices up. So there is a risk with that happening here as well. Although when you're talking about detached freehold properties, the risk is less so as opposed to condominiums where the price points are lower and condominiums are more speculative friendly anyways, as is. So that's risk number one. Risk number two is the rate hikes really eating into your borrowing power. Now that's something that cannot be generalized, right? However, you have to do the calculus to see if you're going to wait for prices to drop even more. Of course, that's going to occur against the backdrop of rates going higher. And of course, you have to see how much is that going to eat into your borrowing power. Anyways, as always, this is Sam from SaberiSixRealEstate, Remax Realtron Realty. Let me know if you have any further questions about anything discussed in this video or any general inquiries whatsoever. Feel free to get in touch with me if you do have any questions. Contact info, description box, subscribe, comment, rate, and review. Thank you very much, sir, for watching. Stay safe and stay tuned. Thank you.